Hi, we're going to walk through several examples and exercises for Chapter 12 on cash flow. So please refer to the basic cash flow statement template if you haven't looked at it already, that it kind of talks about what goes into each section. So this one, the first one is Quick Study 12-1. Classify the following cash flows as either operating, investing, or financing activities, assuming the indirect method. So number one, we sold stock investments for cash. So that would be investing. Number two, received cash payments from customers. That's going to be operating. Paid cash for wages and salaries, operating. Purchased inventories with cash, operating. Paid cash dividends, financing. It's related to our financing stock transactions. 6, issued common stock for cash. That's going to be financing. Received cash interest on a note, operating, because interest income would be part of our net income. Paid cash interest on outstanding notes, operating. Received cash from the sale of land, investing, land is an investment. And paid cash for property taxes on the building, that would be operating. On the next exercise, 12-1, indicate where each item would appear on a statement of cash flows using the indirect method. Declared and paid a cash dividend, financing. Recorded depreciation expense, operating. Remember, that's one of the adjustments to net income. Paid cash to settle long-term notes payable. It's going to be financing. Prepaid expenses increased in the year, operating. Prepaid expenses are a current asset. Accounts receivable decreased in the year, operating. Purchased land by issuing common stock. This is actually a non-cash. We are purchasing an asset by issuing equity, but you'll see there's no cash involved. Inventory increased in the year, operating. Sold equipment for cash, yielding a loss. This one's a little bit trickier. The cash amount is going to be in our investing, but the loss is going to be in operating. It's one of the adjustments to net income. Accounts payable decreased in the year, operating. And income tax payable increased in the year, operating. The next question, exercise 12-2, gives us some selected data, and we are to prepare the operating activities section only for the statement of cash flows using the direct method. So we know we're going to start with net income. So net income from our income statement data is $24,000. Then we look for any of the adjustments that we need to make. They would be depreciation expense. We do have that. So that's going to be added back, $12,000. If we had any gains or losses, they would also be accounted for in this section. Then we look for the changes in current operating assets and liabilities. So we had an increase on our accounts receivable. Remember, if it's an asset, it's going to have the opposite effect on cash. So we're going to subtract it. We had a decrease in our inventory. So that's going to be added, again, a current asset. And we have one current liability, salaries payable. Payables go the same direction. If we have an increase in a payable, like this one, it's also going to be an increase in cash, opposite sides of the accounting equation. So we have salaries payable increase of $1,000. If you add and subtract these items, you're going to come up with the $43,000. On the next exercise, Quick Study 12-18, use the following information to prepare a statement of cash flows for the year ended December 31st using the indirect method. So again, you see just selected data that's given to us, and we are doing we're doing the whole cash flow statement. So we know it has 3 sections: operating, investing, and financing. We're going to start with operating. The beginning of the operating activities section is going to be net income. So we're going to pull that from here, $23,000. We look for any adjustments that we might need to that income. One of them is depreciation expense, so we have $4,000. That's going to be added back. If we have any gains or losses, those are going to be accounted for. We are missing an amount here, but this should be gain on the sale of equipment. So gains are going to be subtracted. You want to remove the effect they had on the net income. We're going to look at our current assets and liabilities. We had a decrease in accounts receivable of $3,000. So it's going to have the opposite effect on cash, so it's going to be added back. We had an increase in inventory of $5,000. So again, opposite effect is going to be subtracted. And we had an increase in accounts payable, $1,500. That's going to be added. So remember, current assets have the opposite effect on cash. They're both on the same side of the equation. And any current liabilities are going to have the opposite effect. So then we're going to add and subtract these amounts, and we end up with net cash provided by operating activities. The second section is going to be investing activities. So we want to see if we purchased or sold some investments. So it tells us we have cash received from the sale of machinery. So cash is coming in since we sold the machinery, so that's going to be added. And then we have the subtotal net cash provided by investing activities. Now we're going to look at our financing activities. We have some cash received from issuing stock, and we have some cash paid for dividends. So both of those are going to be in this section. Cash received is going to be added, and cash paid for dividends is going to be subtracted to end up with the net $7,000 net cash provided by financing activities. The next step is to add up these three subtotals. So we have a net increase in cash of $41,000. We're going to add that to the cash we started the year at, beginning of the year, $40,000, to end up with our cash balance at the end of the year, $81,000. The next problem is a little bit more complex, exercise 12-12, where we're given comparative balance sheets. We have more than 1 year, and we need to prepare the cash flow. So what I've done is I have added some columns to determine the change in the account and the effect on cash from that change. Then I've also noted which section of the cash flow statement they would be in, and I added a couple notes. So I did this more of a strategy just to determine the amounts, and then from this information we're going to prepare the cash flow statement. So if you look at your cash, it decreased by $150. Obviously that's a decrease in cash, and cash changes are going to be at the bottom of the statement. So that's just a note. Then I looked at the current assets. Accounts receivable decreased. We know that's going to be the opposite effect on cash, so we're going to add it. It's going to be in the operating section. We had an increase in inventory. So again, opposite effect is going to be a decrease in inventory, again in the operating section of the cash flow statement. On our equipment, that's an investment. It increased by $8,400, and we're told in the problem that that was purchased for cash. So it's going to be a negative effect on cash. We used our cash to purchase the equipment, and that's going to be in the investing section. Accumulated depreciation. It went up, increased by $7,200. That was due to depreciation expense. So it's going to be added in the operating section. We're going to look at our current liabilities. Accounts payable decreased by $1,500. Has the same effect on cash, so it's a decrease in cash in the operating section. And salaries payable decreased by $100. So again, that's going to be a decrease in cash in the operating section. Looking at our common stock, it increased by $10,000. That's going to be bringing in cash. We issued the stock and we received cash in the financing section, and I made a note that we issued some stock. The change in retained earnings is $10,500. It's an increase and that is equal to the net income that we're going to have in the operating section. Then we have our income statement. So we know that we're going to be using the net income, and then any adjustments, which is going to be the depreciation expense. Here's the additional information that was given to us. No dividends are declared or paid. So we know that there's no effect on retained earnings. We issued the stock for cash, and we purchased the equipment for cash, and we did not sell any equipment. So now we're going to use those amounts that we determined and what section they are in and actually build our cash flow statement. So I know it's on two different pieces of paper. I'm not going to go back and forth, but you can, or you may want to print it out and have it in front of you. That's what I did. So we know the first section is operating activities. We're going to start with our net income. We're going to look for any adjustments to net income. So we had one depreciation expense that's going to be added back. If we had any losses, they would be added back. If we had any gains, they would be subtracted. Then we look at the changes in our current operating assets and liabilities. The decrease in accounts receivable is going to be an increase in cash. The increase in inventory is a decrease in cash. The decrease in the two current liabilities, accounts payable, are decreases in cash. And then we're going to determine the net effect of all of this. So it's going to be a net cash used of $1,750 just by adding and subtracting these different numbers. So you can see all these numbers are coming from the balance sheet that we looked at a few minutes ago. Now we're going to look at the next section, cash flow from investing activities. We paid out cash for equipment. So that's going to be negative $8,400. That was the only investing activity. So the subtotal is the same. Our financing activities. We received cash for issuing stock. So again, that subtotal is the same. And then we determine the net increase in cash by adding these three subtotals up, and we have a decrease in cash for the year of $150. We add the beginning cash, and this will equal the balance sheet ending cash of $30,400.